Hello everyone and a very good afternoon to you. This is Rachel live from 𝐊𝐴𝐥𝐿 Studios and you're watching the Market Movers. Australian share market is turbocharged today on the back of power-packed US tech stocks performance overnight, while headwinds still persist in the form of inflation concerns, lower commodity prices and virus concerns. It's important to see if the ASX 200 is set for a fifth weekly gain in succession. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. The Fed's shift to a hawkish tone on policy settings drove the market scenario and portfolio allocation and changes this week. Wall Street stocks ended mixed on Thursday as investors tried to digest the US Federal Reserve's hawkish interest rate guidance. The Federal Reserve's drastic decision to increase its inflation forecast and lift up the timeline for an interest rate hike has emerged as a shock, apparently, for equity market participants who are getting comfortable with the central bank's patient response to an uptick in inflation. Meanwhile, the change in the central bank stance appears to contradict its claims that the ongoing rise in inflation is transitory in nature. The Federal Reserve's accommodative money policy stance has been widely considered as a catalyst for the US stock market's strong rebound from March 2020 crash. Therefore, the central bank may need to reassure that its anticipated policy tightening may not be disruptive to market stability. Having said that, the interest rate anticipations, along with the progress in the US economic recovery and the pace of COVID-19 vaccinations, are expected to chart out the growth trajectory of the equity market in the months ahead. If high inflation readings begin to abate in the coming months, commodities may suffer a significant hit as they've been a popular investment vehicle over the last year as investors hedged against inflation. In fact, the signs of a broader commodity sell-off are already evident after the Federal Open Market Committee meeting as the US crude futures plunged the most in a month on Thursday. Given this scenario, the market may see financial investors who've been piling into commodities to guard against inflation rotating into growth-orientated stocks. On that note, the Reserve Bank of Australia has been an odd one out in embracing hawkish tone as other developed countries' central banks. It is to be seen if the central bank will retain its belief of waiting to raise interest rates when the labour market is tight enough to drive inflation and wages sustainably higher, or improving macro fundamentals will prompt the policymakers to change their stance. Let us now jump onto the sectoral charter defining supercharged market momentum today. Australian stocks rose on Friday as a rally among technology firms following an upbeat performance among US peers overnight offset losses in mining shares. Investors pumped money into tech stocks as sentiment was lifted on Wall Street by hopes of a strong economic recovery, although a post-Fed hangover did persist. Buy now, pay later giant 𝐧𝐞 the leading gainer so far on the ASX today. Index major Afterpay rose their shares about 7% to its highest in almost 7 weeks, boosting the index. Notably, Afterpay has changed the definition of fintech in Australia. It follows an affiliate marketing business model, incentivising customers to buy from affiliates using its payment plans. Over the years, it's acquired a large customer base across borders. Other than Australia, it operates in Canada, New Zealand, the UK and the US. Afterpay currently strives to expand into Asia. On that note, it's time to take a very short break, but stay tuned. I'll be back in just a moment.
New Zealand is unique, and 𝐊𝐴𝐥𝐿 TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐊𝐴𝐥𝐿 TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐊𝐴𝐥𝐿.co.nz.
Hello and welcome back. This is Rachel live from 𝐊𝐚𝐥𝐤 Studios and you're watching the Market Movers. Software maker Altium shares climbed on playing up strategy goals amid a takeover interest. They added almost 3% and was on track for its best session in a week. Notably, Altium played up its strategies and goals at an investor presentation amid expectations of higher offers after it recently rejected US peer Autodesk's buyout bid. According to Altium, its renewal business was strong, while its China market was also delivering a solid performance. The company also reaffirmed target of $500 million of revenue and 100,000 subscribers by 2025, although it expects revenue and margins for financial year 2021 on the lower end of guidance range due to a slow first half of the year impacted by the COVID-19 pandemic. Tech shares such as Xero and WiseTech Global traded higher, taking cues from strength in Nasdaq trading overnight. Healthcare stocks such as Mesoblast, Clinuvel Pharmaceuticals and Sonic Healthcare were the top gainers on the ASX so far today. Also, biotech company Star Pharma Holding shares rose after an update on their nasal spray for COVID-19. Further antiviral testing has confirmed SPL7013, the active in the company's antiviral nasal spray Viralise, has potent virucidal activity. Notably, the active works against the various strains of the COVID-19 virus. Moving on, shares of Paradigm Biopharmaceuticals jumped on a clinical trial nod in Brazil. The approvals are received to study injectable pentosan polysulfate sodium in a phase 2 clinical trial in patients with a condition causing an inflammation in their tissues and organs. Denting these gains, gold stocks were the worst hit. Aussie gold stocks extended losses as bullion dropped on firmer dollar after the Fed struck a hawkish tone on monetary strategy. Australian gold miners De Grey Mining, Evolution Mining, Ramelius, Newcrest Mining and Northern Star Resources are all inching lower today. On that note, it's time for a very short break. Stay tuned. I'll be back in just a moment.
At 𝐊𝐚𝐥𝐤 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐚𝐥𝐤 TV.
Hello and welcome back. This is Rachel live from 𝐊𝐚𝐥𝐤 Studios. You're watching the Market Movers. Let us now look at how iron and copper explorers displayed dismal performance so far today. Heavyweight miners BHP, Rio Tinto and Fortescue Metals are all currently trading in the red. On Thursday, prices of steelmaking raw materials in China rose, supported by data revealing a record monthly crude steel output. As a result, the most actively traded iron ore futures for the month of September delivery increased by 1% to 1,224 yuan a tonne at the close. Meanwhile, copper prices fell to their lowest level in almost 2 months after the US Federal Reserve put forward its expectations for an interest rate hike, sending the US dollar higher and sapping demand for metals. ASX listed copper players Oz Minerals and Samphire Resources traded in the red. The Australian energy sub-index has hit over a 2-week low, tracking a dip in crude oil prices. On Thursday, crude oil toppled from their highest level in years, pressured by the US dollar's gain. This is because a stronger dollar makes crude oil more expensive to the holders of other currencies. Liquefied natural gas major Woodside Petroleum, their Papua New Guinea-focused oil and gas explorer, oil search and gas producer Santos, an oil and gas explorer Beach Energy, along with integrated energy company Origin Energy, are all trading in the red. Besides this, the heavyweight financials were seen under some pressure on the board after a widespread internet outage shut down websites of major Australian banks, including the country's central bank and 3 of the big 4 banks. On that note, it's time once again for a very short break, but stay tuned, I'll be back very soon.
Property by 𝐊𝐴𝐚. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐴𝐚 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐴𝐚.
Welcome back. This is Rachel live from 𝐊𝐴𝐚 Studios and you're watching The Market Movers. Next in our show, let us look at other major stocks under the spotlight today. To begin with, infant formula maker Bubs Australia advanced on launching into the US formula market. Notably, Bubs is set to launch its branded formula range on Walmart.com. The company's products are expected to be available from September 2021. While Bubs currently sells its products on Amazon Australia, its range will also be extended to Amazon.com in the US. Global provider of online wagering products and services, BetMakers shares climbed the most in 4 months on completing a Sportech acquisition. The company has completed its acquisition of Sportech's racing, tote and digital assets in the US, the UK and Europe. The acquisition of the tote and digital business enhances BetMakers' position to capitalise on growth opportunities in international wagering markets, and it's anticipated to materially expand the company's global customer base, technology and also their geographic reach. Next up, let's talk about telecom giant Telstra. Their shares inched up on New Zealand's delisting update. The company says it would complete its delisting from the main board of the New Zealand exchange at the close of business on Friday. Telstra shareholders who held shares through the NZX will automatically be transferred to the ASX, and their holdings migrated to the Australian share register over the weekend of the 19th and 20th of June. Moving on now, Sunfire Resources has delivered its highest value shipment of copper concentrate from its DeGrussa operations in Western Australia. Notably, the shipment provides a further indication of the extremely strong demand for high-quality copper concentrates globally and reinforces the deep, liquid and mature nature of the global copper market. That's according to Sunfire. That's all from me for now. Stay tuned for more live updates on 𝐊𝐴𝐚 TV across the economy, markets and sectors. I'm Rachel, signing off for now.